How profitable is your studio? Are you making any money? Are you making any money? Are you taking it to the bank? Is your studio profitable? You have to study, you have to know the numbers. And as though left brain I can be at this point, I'd like to show you some basic principles of how to figure out how profitable your studio is. This is not an accounting class. This is going to be the very basic knowledge. I am not an accountant. I've never studied that. I was just taught the way to read a profit and loss statement. And is the studio profitable? Are the categories of products profitable? And is each product profitable? Because if you're losing money on some products, therefore your categories of products some of them will not making money, and obviously it's going to affect your studio profitability statement. But then we have to look at terms. We first have to look at terms. How profitable is your studio? Well, it doesn't have to be that fancy, but it could be fancy on paper. Let's have a look at some of the basic words. So we all know what sales are. Total sales would be here. Okay. So what would be in percentage-wise? What would be sales? It's always 100% sales, right? Are we following me? What's the next step underneath there? Now we're starting to get into expenses. What would be the next step? It would be cost of sales, right? Now the cost of sales is basically the expenses that you have to go through to produce a piece of work. No work, no cost of sales. That means printing, that would be an album, that would be retouching. There could be an assistant working for you freelance. There could be a hairdresser. There would be albums or frames. All these expenses related to doing the job. Not the telephone, not the internet fees, not your salary, not the rent. Those would be, the next one would be the fixed expenses. Also called administrative expense. But here, there's a spot where it says gross profit. Take that away from that, you get a percentage here. And when I teach something, I normally teach a 20% cost of sale here, and therefore you got an 80% gross profit. That would be the way I sort of teach it, and it's been, a PP of A goes 70 to 80%, I think it's closer to 70. It depends, okay? But I'd like to teach 80, because we work our butts off on this job. We deserve some money. We deserve some reward, financial reward. Here, what you got, what are the other expenses that we have here? Of course, the top one would be salary. Who in this room pays himself a decent salary regularly? Decent. The key word here was decent. Okay? Define decent. Something that you can live on. Something that you can live on. Okay? Not many people. What happens is that we wait till the bottom line to see if there's any money left, and then we pay ourselves, right? Go to a bank and ask us, I want to buy us home. It's $450,000. And what the first question they'll ask? What's your salary? It depends. It really depends on the month of the year. Like in January, it's like 0. But in October, it's 50. 50 what? 1,000? Yeah, okay, 50. Okay, 50,000. So that's really not the way to convince a bank manager to say, I'm going to lend you $350,000 on this house. You got $100,000 down payment or something. So the thing is, we wait till the end of the month to see if there's any money, or we go to the end of the money until there's a month or something, or whatever. And then the next step would be rent, and then would be telephone. You know all of this. I've listed some of them here. Normally a profit and loss statement is a little more extensive than that, because it's got more line items into which you break them down. That is where you're going to find if your studio is profitable or not. We'll look at this here, 154,000, $28,000, which would be 18.36% in lab fees, albums, frames, and whatever. Gross profit margin 126, 81.64, which would be a good studio. You're looking at a salary, photographer and a part-time. The salary will always be the highest expense in your studio. If you do not take that into account, how are you going to price your work? You're not considering the highest expense. And I'll show you the difference in a minute. You're not considering the highest expense, and you're trying to make some prices through that. The equation doesn't fit. It's a losing battle. In my studio, yes, Carol?
So your gross profit, that percentage, that 80% comes after your cost of sales, not after the fixed expenses too.
No.
It's just after the cost of sales.
It's just after the cost of sales, because that 80% or 81% in this case, this is what you use to pay all the other expenses, including your salary. Now technically, and this was part of Kodak's, Kodak, remember Kodak? Remember the company? This yellow thing. Kodak had put together a book, How to Administer a Photography Studio, years back. And that's what this was to me, was what I based my whole studio, whether it was a small portrait or wedding photography studio, whether it was the commercial outfit that it became years later. I based my numbers on that because they brought me with industry averages. And I built my business on that. And I could see that in wages, in salaries, I could budget between 35 and 45% of that. That would go to wages and salaries. And when I had my payroll, was over $800,000 payroll, 800 grand for a payroll. And I would look at it, was 35%, 38%. I said, I'm okay. And then Kodak was saying that you should aim for a 5 to 7% rent budget for your rent. And my rent was $85,000 a year, and it was 5.76%. I was okay. And then I kept track on this thing on a monthly basis. Because when you have a business that runs this way, you got to keep track pretty often. Not every 3 months or every 6 months. You got to do it every month. So every month I was keeping a close eye on those salaries. Because if I was to hire a new person in my studio, there would be an impact on my monthly sales. Because I got an extra expense. And then all of a sudden I would see my monthly expense and salaries go, boop, 46. Then I would say, okay, we got a new person in there. This person has to be, he's trained. He's going to turn into a profit center pretty soon. So when I would have a little yellow flag, and I would say, okay, I'm going to keep an eye on that expense. And the month after, I would look at it again, it's down to 44. We're in the right track here. This person is doing work we're selling. And that's how I kept it like a hawk. I was looking at this thing like a hawk. One expense, salaries. But that included all my salary, my partner's salary, everybody's salary. Not just everybody else except me that I would use the money left at the end of the month to pay me. No. I had to plan for my salary right from the get-go because it influenced my pricing considerably. You understand what I'm saying? Then you've got all the other expenses that you have to cover, and hopefully, you see, if you've got 67% for fixed expenses here, you deduct that from the 81 because you've got 81 left from your 100%. You got 81 left. You got 67 that go to paying those fixed expenses. Therefore, you have a profit of 14.26. That's an example I'm showing. You should have a profit and loss statement. Even if you're a small business, you should have your accountant laid out this way. Often what they'll do, they will bundle the sales. They will bundle the cost of sales, or sometimes they would hide the cost of sales in the fixed expenses. That's not very good. It's difficult to analyze. Very difficult. You need to break it down into what is it really costing you as cost of sales? To produce a job, I need to know that. I knew that in my studio it was costing us 14% for film and processing only. And film at the time, we buy film, process it. We would buy Polaroid, remember Polaroid film, the chemical light meter? Like people used to use a lot of Polaroid. And at one point in time, I said, we got to bring this down because people were using Polaroid, like not using the light meter, just doing the Polaroid. But these 4x5 Polaroids would be at $2.50 a pop. So if someone is shooting on a set and using 5 or 6 Polaroids, when we budget for 2, then we're down, we're cutting our profit margin. Then I did tell my employees, I said, here's what I'm going to do. If we can manage to bring down our cost of sales from 14, every percentage point puts $9,000 back into the studio profits, and I will give you back 50% of that. I'll give you back the 4,500, which I'll split between the employees. The executives, the owners are not part of this program, just you. So that's pretty smart, Andre. That's pretty cool. So we did that for a few years, and I was watching my cost of sales from 14 go down to 13, 12, 12 and a half, 12, 12, 11, 11 and a half, 11, 11, and then 10. That was doing fine, and then the money was coming in, the guys were getting a bonus, you know. And all of a sudden I could see it creep back up to 12, to 12 and a half, to 13, and I said, oh, guys, we're back to where we were. Okay? So someone in the group said, does that mean I have to bring my own toilet paper now? I said, that's it. End of the program. You've gotten used to the money. You've gotten used to the bonuses, and therefore you put no more value into it. You're not willing to do the effort to help us in this business. We showed some, a nice corporate gesture into giving you back some of the profits that you're helping us to create, but then you sort of took it for granted. I'm sorry, but we have to put an end to this program. See that? But you can reach those decisions when you keep an eye on your things. If you let it go, you let it go, and then you lose track. Some people will ask me, Andre, what would be a good net profit, considering all your expenses? What would be a typical good profit that you'd make? And my analogy of this is pretty simple. If you had in your pocket, a cash, 154 grand in your pocket, you'd want to invest it, right? Where would you invest it? And what would be a typical return that you'd want from it? 10%, 12%? If you get 12% today, you're doing good. So that would be a typical, that's a ballpark. I'm winging it, But it makes some sense. If I had that 154,000 in my pocket, give me some return on that. So I'm getting a job, I'm getting paid, a decent salary for my job. And I'm also a profit at the end, which can be transformed into dividends or profit that you keep in the company. You want to have a profitable company. You look good when you go to the. You look good when you go to the bank that way. Okay, so we've looked at this cost of sales. We sort of basically went through that. I'm going to go skip quickly. Gross profit margin. Total expenses. Now the total expenses here would be your fixed expenses plus the cost of sales. You want to know how much the whole thing. Therefore, you're going to get the remaining of the 154. You take 132, and then you got 22 left. And you got a profit. That's studio profitability. Now we need to find out, is your studio profitable now, and what's taking us down? Is it the rent that's way too high? It could be a rent at 20%. But what does that mean? I went to a studio, a very, very good photographer in Edmonton, Alberta, like very high-end photographer, and his rent was 15% of his sales. And then I said, okay, that's fine, 15%. I said, what's your marketing cost? He said about 3 or 4%. So I said, why are you here? Well, this is a fancy building. Everybody knows this building. I don't have to say, go to Google, get your GPS, and get to my studio. You said a merchant building in Edmonton, downtown Edmonton. Oh, I know where it is. So this was, I would say, let's borrow some money in the advertising budget and bring it to the rent budget, because you're in a premium spot and people will know exactly where to find you. And that's basically what we did. So Kodak said 5 to 7%. It's just a ballpark, but then you have to, that's a range. And in 1999, we moved from our studio. It was 11,000 square feet. It was costing us 85 grand in rent. And then we moved to a 16,000 square foot because the studio was no longer applicable for our needs. So we moved to a larger studio, and that bumped it up to $100,000 a year for rent. And I just did those numbers, that spreadsheet I'll show you in a minute. And then I went from 5.7 to 6.8. Well, to me, I still was in the range. I said, that's not bad. I said, I can afford that. Because right now, if I move today with the same sales, I'm still making some profit and covering all my expenses, including salaries. I can make the move. So we made the move. However, if it had gone to take from 85 to 200,000 a year, it would have been totally illogical. Because moving to the new studio opened doors for more sales. But then, even at the actual sales, we could afford it, so we moved.